Hi friends, this is Bank Nifty 5 minute short on 20th December 2022. In this market you can see some heavy manipulation happen. If you are a student of Wyckoff trading methodology, you should be able to understand this market and then have taken some beautiful trades. However, even if you are a student of price action or market maker strategy, you should be able to observe the candlestick behavior, the relationship between buyers and sellers, and should have taken some very good short trade in this market. Let me show you how. In this, the day of 20th December in Bank Nifty 5 minute chart has created a strong bullish bar which poked below this low. And look at the very next candle. It is also of similar size in terms of its candle body. So when candle pokes low here and then creates a very organized way of candles here, then people might be thinking to go long. Okay. However, look at the number of times this low tried to poke close above this inward frequency and then struggle to reach above it. And when price is struggling to reach above that level, look at the bearish candles that are forming here. And even if you take draw a pitchfork in the latest highs and lows, you can see that this price is now being respected both by pitchfork and inward frequency, and there are some strong bearish candles. So this gives us an impression that market now is going to fall and many people might have taken short positions. But look at the very next candles. The next two candles have few candles have clearly closed above this level. Okay, so which means the market manipulation which has done at the bottom of this wick has now taken the position to go long. So the manipulators are very active in this zone. That means this is the point where they have tilted the market up this zone. Okay, because look at the bottom of the wicks. So these wicks here have pushed the market up, and when people are very happy to go long after when price closed this high with a strong bullish candle, look at the very immediate fall. So this is the first level of manipulation, and when price reached this already uh, you know tested demand zone where market manipulators have heavily traded in upward direction, those players have once again came into picture and then tried to close price above this high. So now retail traders might be very happy that market is now going to go higher highs and higher lows, so which is a clear upward momentum or uptrend, and they want to take opportunities again when market gives opportunity in the demand zone to go long. However, look at the third high. The third high is not closed but then has poked and then came down immediately. That means the manipulation that was done in this zone, in this level, it's the same way the price is going to price was manipulated in this level. And look at the strength of buyers. So earlier price has created higher high with greater momentum. Now look at the strength here of manipulation. So which means the buyer's strength is getting exhausted and price is getting manipulated, which means this should be a market edge. This level should be a market edge. Now the retail traders might still be wanting to go long, but by this time the market makers have already entered some great short positions. And if you want to go long, then price reach to any of these demand zones, you might be frustrated because you are now fighting directly against the great big market players. Now the idea for us is to go short. How do we do that? When price has reached this zone, okay, this is the precise demand zone. Okay, so this demand zone is solid because price is able to the buyers from this zone are able to close above this high, so this is a proven demand zone. Similarly, there is a supply zone here. Okay, let me draw the supply zone in red color for you to understand better. Okay, so this is the supply zone and this is the demand zone. Now, when price reaches this level, this is good opportunity to go long. However, look at the number of times price tested this zone. 1, 2, 3, 4, 5. 5 times it tested, and then immediately there is a price closing below this low. That means the sellers are now active from this zone and are ready to short the market in the opposite direction. Now, even when they're going to short, the market has given another opportunity that it again tested this zone and created inside bar. But before creating that inside bar, look at the candlestick patterns here. The very bullish candles with strong bottom wicks indicating buying pressure. So similarly, like this, no similar fashion to like this. So all the retail traders might be excited to go long here, and with this candle they might have surely got long with a stop loss below this low, but they are now heading competing against the very strong market makers who are have taken positions in the opposite direction, and that is what has reflected here, the strong bearish candle. Now since these buyers have failed to close above this level, when price tested this zone and created bars like this, it should not be taken that opportunity to go long here, and immediately there is a fallback of price, and that is because the market makers have already entered short portions and they might want to come down. Now how long will they come down? That's the question. So earlier this low, this is the latest low, and they have clearly closed below this low. Okay, so the latest demand zone you can see is from here. Okay, so this is the latest demand zone and price has reached this zone. So if there is any player in the market who can stop this market makers from selling portion, it is only the major buyers from this zone who can stop the market, and that's the reason price came here and then has given a temporary stop. So this is how you have to interpret market, guys. This is where you have to short the market with a stop loss above this low. The reason being, this is the proven supply zone for market makers and this is the proven demand zone for buyers. So this is the context how we built around it using candlestick patterns and the relationship between buyers and sellers, which means how market makers have played the market here. Now how do we identify this edge? Simple. You can draw a pitchfork between the latest highs and lows. In this case, you can simply draw a pitchfork like this, but since market has drifted away from this zone, you can shift the frequency of this pitchfork to the latest low. Okay, and the bottom of this wick, this pitchfork should give you a precise target. To be more accurate, you can draw a parallel line along this pitchfork and keep that extended line here. Okay, so this is the low that is manipulated earlier, and this is a point precise exit. You can can exit the market. So this is how we have to understand the market, guys. And in terms of a fractal flow strategy, okay, now let me show you how the same can be interpreted with the help of fractal flow strategy. And look at this relative strength index with respect to price in this zone, and price is testing this supply zone. Price has created higher high here, small higher high, and look at RSI, lower low. So which means there is bearish reversal divergence, the two second degree bearish reversal divergence. So all this is giving you an impression, a very strong confirmation that this is the market edge and this is the point where you have to short the market with a stop loss below this high. So we generally do that with the help of 1:3 risk reward ratio, and if I interpret the market in terms of short positions, this is the point precisely where it could have shorted the market, and this is the stop loss, and we go with 1:3 risk reward ratio. 1:3 risk reward ratio has given you somewhere around this zone. So this is a beautiful trade you could have taken in this zone, and this you can do with the help of knowledge that you can gain through learning price action and the other strategies that I have mentioned before. So if you're interested to learn these techniques, very advanced techniques, you can approach us and we can teach you how to read the chart patterns, how to understand the market, how to interpret the relationship between buyers and sellers, and which direction the market makers have taken their positions, and what is the precise position where you have to enter the market and exit the market. So with this note, I'm signing off. See you in another video. Bye bye.